We are covering the Lifetime Learning Credit, often called the LLC. This non-refundable credit is worth up to a maximum of $2,000 per tax return. The single most important concept the exam will test on this is the per-return limitation. Unlike the American Opportunity Tax Credit, which is calculated per student, the Lifetime Learning Credit is capped at $2,000 for the entire tax return, regardless of how many eligible students the taxpayer is supporting. For example, a married couple is paying for graduate school for their 2 children. They spend $10,000 on tuition for each child. The exam will present an answer choice of $4,000, tempting you to calculate $2,000 per student. The correct answer is the $2,000 maximum for the entire return. The credit is calculated as 20% of the first $10,000 of qualified education expenses. If a taxpayer has only $5,000 in expenses, the credit is $1,000, which is 20% of $5,000. If they have $15,000 in expenses, the calculation is capped at the first $10,000, resulting in the maximum $2,000 credit. Another frequent exam trap involves qualified expenses. For the LLC, this is strictly limited to tuition and fees required for enrollment at an eligible institution. It does not include books, supplies, or equipment unless the student is required to purchase them directly from the school as a condition of enrollment. A classic exam question will describe a student buying a required laptop from a local electronics store. Those costs are not qualified expenses for the LLC. The exam heavily tests the differences between the LLC and the AOTC. You must know that a taxpayer cannot claim both credits for the same student in the same year. The LLC is ideal for graduate students and individuals taking courses to improve job skills because it has no 4-year limit. To remember this, use the phrase LLC is for lifelong learning, reminding you it applies for an unlimited number of years. The AOTC, in contrast, is restricted to the first 4 years of post-secondary education. Furthermore, the LLC is non-refundable. This means it can reduce a taxpayer's liability to zero, but they will not receive any of it back as a refund if the credit exceeds their tax liability. The AOTC is partially refundable, which is a key distinction. Finally, the exam requires you to know the modified adjusted gross income limitations. For 2025, the credit begins to phase out for single filers with a MAGGI between $80,000 and $90,000, and for joint filers between $160,000 and $180,000. A question will provide a taxpayer's income and expect you to either reduce or completely eliminate the credit based on these thresholds. Always verify the taxpayer's MAGGI in the prompt before you even begin calculating the potential credit. The most critical takeaways are that the credit is per return, non-refundable, and covers only specific tuition and fees.